you are a manufacturing business owner and you ever looked at your year-end accounts thinking these numbers don't match what I see on the factory floor, you're not the only one thinking like this. Your compliance accounts are designed to show you how your business actually performs. Let me explain why. Your statutory accounts exist to satisfy three groups: HMRC, company's house, and your bank. They answer one question: did you make a profit or a loss? They are built on accounting standards that treat paint manufacturer the same as software company. They use categories like cost of sales and gross profit that lump completely different cost behaviors together. And they are backward looking. By the time you see them, you are reading history from 6 months, 9 months, sometimes 12 months ago. That is absolutely fine for compliance, but it is not useful for running a manufacturing business. Let me give you 3 examples of what's missing. First one is product level performance. Your accounts show total revenue and total cost of sales, but you make multiple products. Some of them are profit making, some of them are loss making. Your compliance accounts don't separate those out. I've seen businesses where their best-selling products was subsidizing 3 loss-making lines. The accounts show the profit, so nobody questioned it. Second one is where the capacity is actually going. You've got machines, people, floor space, and your accounts show depreciation and wages costs, but they don't show you which products are using up the capacity or which customers are demanding endless small batches that kill your efficiency. Third one is true material cost. Your accounts show material purchases, but they don't show waste rate, scrap, rework, or difference between quoted material cost and what you actually use. I've seen electronics manufacturers where bill of materials said one thing, but the actual consumption told a completely different story, and that was just because of manual PCB assembly in the second of processes. Here's what happens when you try to manage performance using compliance accounts. You make pricing decisions based on gross profit percentages that hide the real cost structure. You chase revenue from customers who seems profitable but destroy your margins when you factor in setup times, batch size, quality issues. You can't answer basic questions like should we buy this new machine or which product line should we push, because the cost information doesn't exist in a usable form. To run a manufacturing business well, you need different numbers. You need product level costing that shows true manufacturing costs, not just materials and labor, but realistic overhead absorption based on what each product actually consumes. You need to see capacity costs separately from volume costs, so you can make sensible decisions about pricing, batches, and equipment investment. You need forward-looking information that helps you plan, not historical information that explain what already happened. Your compliance account will never give you this. They are just not designed to. If you want to understand real performance in your manufacturing business, you need a different set of numbers sitting alongside your statutory accounts. One set keeps you compliant, the other set helps you make decisions well. Most businesses only have the first set, that is usually statutory, but the successful businesses have built both of them. I am Yashim. I work exclusively with manufacturing and engineering businesses on product costing, performance measurement, and compliance. If you would like to find out more, please click in the below link and book your discovery call with me. Thank you for watching.